Hello everyone. Welcome to our lesson 4, how to pass entries in the ledger accounts from the journal record. Remember, in our lesson 3 we had tackled how to pass the journal entries from the financial transactions. If you can remember, we had a list of transactions here. This was a business that was established by somebody called Bestie. And we said that in our lesson 4, still we would use this question to display or demonstrate how we can be able to transfer the information from the journal entries or the journal record to our ledger accounts. Without wasting much time, allow me to jump into the activity. A point to note under this category, when we were trying to put a definition to the word accounting, we said that it is the process of recording, summarizing, and analyzing financial transactions so as to come up with financial results that will be used by the financial statement users to inform their economic decisions. So we had done the bit of recording. Now we are picking information that we had captured in the journal. I want to use the ones that relate to each other so that we bring them to a specific account. That way we'll be able to at least get to understand what is happening in the business or be able to analyze the financial transactions of the business. The aspect of bringing them together, that is what we refer to as passing transactions in the ledger accounts. Our question of today says, how to pass entries in the journal accounts from the journal record. And we had agreed that our journal record that we are proceeding with is the one that we used in our lesson 3. Allow me just to draw here so that we can be able to see how it looks like. You'll be having a two-sided drawing here. The rows that I'm trying to capture here are giving me an allowance for putting transactions. This one will go depending on the number of transactions that you'll be having on a particular ledger account. We can have two lines here to show us that we have got two sides of this ledger account. So this part will be having the amount. Here we'll be having the ledger folio. Here we'll be having details, and then we can have our date somewhere here. This other side, you replicate the same thing that you had the other end. We have the date. We have the date here. We have details. Then we have ledger folio. Then we have amount. Then we have date again. Then we have details or particulars. Then we have ledger folio. Then we have amount. Looking at the journal record, we have got bank, capital, you can see them. So now I want us to number them so that we can be able to see what we are talking about. Bank, this is the first account that we'll be having. Then we have capital. Then we have the next thing is furniture. Then we have bank again. So this bank, the transaction that was here will be captured in the account of bank that we had already identified. So you only need to come up with one ledger account for a particular item. You cannot have two bank accounts. So this one will be falling under bank, which is the first ledger account. This one still under bank. This one 3, 4. We can have 4 here. Then this one falls under bank. Saddam is the 5th one. We have sales account to be the 6th ledger account. We'll be having advertisement expense as the 7th ledger account. We had already identified the bank account, so we'll proceed with the first ledger account, which is bank account. Then we had already identified purchases, if you can remember. So it is number 4. So this one will just have number 4 here. And then we'll be having, we have number 7 as the last one. Then we move to number 8. Then we can move to, we are seeing cash here for the first time. So this one will be our number 9. Then this one, number 1. Then we have cash being number 9. Sales is repeating itself. It was number 6. So we'll maintain the number 6 ledger taking care of that transaction. And then another one is drawing. Drawings account, this one will be affecting capital as we had mentioned. We have the last one as number 9. Number 9 here. So we can put this one as number 10. Then we can have, this is cash, which is number 9. So there we still have the same. Then on this other side, we have Maggie. We had already identified the account of Maggie, number 8. So we shall maintain number 8 here. Number 8, then we had purchases. Purchases was number 4. So you'll maintain it here, number 4. And then we should be having sales. We had already identified sales account. Sales account was to be our number 6 ledger account. So you'll be having number 6 taking care of that transaction. We had already identified Saddam's account, which was number 5, the 5th ledger account. So this will still be going under the 5th ledger account. Then we'll be having bank. Bank was to be our first ledger account. So this one also will be taken care of by the first ledger account. Then we have Saddam being the 5th ledger account. So this one also go to the 5th ledger account. We have Maggie's account here. And remember we have Maggie up here. So it is number 8. So there also we have number 8. Remember bank was our number 1 ledger account. So in short, if you look at these numbers we are having here, we are only going to have 10 ledger accounts to take care of all the transactions that we had there. This is the outlook of how an account should look like. Now the only thing we are lacking here is to identify which type, or rather which specific account are we talking about. Definitely this side will be the debit side, so we normally denote it with some DR. Then this other side we also have some CR to denote the credit side. So this side is the debit side and the credit side. So don't confuse them having one side on the other end and the other one on the other side. Always ensure that the debit side is maintained on the left hand side while the credit side is maintained on the right hand side. Let's say this is going to be our bank ledger account. Each ledger account must have 2 wings. We have the side of debit and we have the side where we record all the credit entries. There is an allowed skeleton format that you can adopt, which doesn't take a lot of time. It is called the T account. So in that case, instead of drawing all these inner columns, you will avoid them. But the only thing that you need to display here is the column that subdivides the side of debit and credit. Then we have the title up there. So this one here and this one here, it will form a T account. Then the rest of these other columns will be avoided. I'll show you how one looks like. I want us to start with the first entry. On 1st March 2020, we have bank and capital account. We had already said that this first one is going to be our bank account. Now, the next thing is to draw the corresponding ledger account, which is capital account. So we can come here and draw a small account. Let's give space for that bank account. So this one will be our capital account. Our capital account, we have credit side, we have debit side. So the first one is bank and capital. We have already here, we have the bank and we have capital. So even this one of bank, this bank account can also be drawn in this format. You just put here bank account. So it's the same thing. So what you do here for me, Pick the amount. We have the amount as 90,000. The date is displayed and we have the two accounts. So under ledger accounts, the ledger entries, now you don't capture this description. Instead of writing any description in the account, you'll just be putting the corresponding account as your description. For bank account, it should be debited as per what is here. So we are just following whatever we did here. We don't want to reason with it again. We had already done that. If you didn't get an opportunity to get hold of that, then kindly fall back to our lesson number 3. Get the arguments that we had already considered to make us, or rather to help us come to this conclusion of debiting and crediting this one. And then further, if you don't know why we are debiting this asset and the capital, I will also refer you back to our lesson 2, where we have discussed about some practical application of double entry concept, and you will meet something like this. So you will get much details of this table, which I said will be moving with each and every time. Now the bank is to be debited. The date is 1st March. So just write here, the debit side is this part. So you write here 1st March 2020. The corresponding ledger account is capital account. So that is what you use as your description or details. So here you write capital account. You write the affected account alongside this one. So then the amount here should be 90,000. Obviously, we had, you remember we had mentioned that we are supposed to be having some dollar sign up here to help us denote the column, the whole column. All the contents within this column, they are in terms of dollars. Now we go to the second entry, which is capital. We credit capital. The date is also there. The date is similar to this. Bank is the corresponding ledger account, you can see. So you say bank account, then 90,000. The second transaction, which happened on 3rd March, it is involving furniture and bank. We already have bank account here. The only account that we don't have out of these two is the furniture account. So the one that we had already developed here, we can use it as our furniture account. Under furniture account, we are supposed to debit $5,000. So you'll just say with the sign dollar here, under furniture account, which one is to be debited? Furniture is to be debited on 3rd March. So just say here, on 3rd March 2020, we are supposed to be having the other corresponding account is bank. On 3rd March 2020, bank account giving us 5,000 to purchase furniture. On 3rd March, under bank, 3rd March 2020, and then you say here furniture, meaning $5,000 came out of bank to purchase furniture. So furniture account, and then here you say 5,000. The next thing that you need to have there is purchases account and bank account. We already have the bank account, we don't have purchases account. So you need to develop the purchases account. Purchases account. 5th March, there is purchases and bank. So you are supposed to debit purchases 20,000 and credit bank on the same day. On 5th March 2020, you can say bank account, and the amount is 20,000. The amount is 20,000. Then you go to bank. For the double entry aspect to be complete, you have to go and credit the same amount here on 5th March 2020 with purchases. Purchases account of 20,000. On 8th March, we have Saddam's account. and we have sales account. We can put this one to be Saddam's account. We can have another account here. Here we have sales account. Now it is Saddam's account against the sales account. Saddam is to be debited while sales account is to be credited. We have on 8th March 2020, we have sales amounting to sales account. You'll have 15,000, and then you go to, we have 15,000, then we go to sales account and record another 15,000. So you come here and say on 8th March 2020, then you mention Saddam's account and say 15,000. We have advertisement account, which is an expense account. Then we have bank. Already we have bank, so we can only develop the advertisement expense account. Advertisement expense account. Advertisement expense account. Advertisement expense account. So that is what we are going to match against the bank. So bank is to be credited while advertisement account is to be debited. So you'll just say here on 12th March we have bank account. The amount is $400. And then you go back to the bank account here. Remember, this thing is supposed to be done in a book. I'm just using a paper to demonstrate. We have already debited the advertisement account, so we are going to credit this. So on 12th March 2020, we have advertisement account. Advertisement expense account. And then we say here it was 400. The next one that we are going to deal with is on 14th March, purchases and Maggie's account. We already have here purchases account, but we don't have Maggie's account. So we can go and develop another account to call it Maggie's account. So we have debit, credit, debit, credit, Maggie's account. Remember, every time you must be having the debit side and the credit side. You must show the signs of credit and the debit entries. You cannot just draw a T and then you leave it without those ones, without the signs of credit and debit. For Maggie, we just come here and debit purchases and credit Maggie's account. On the date here is what? On 14th March. On 14th March 2020, say Maggie's account, and then now you mention 26,000. Then you go to Maggie's account on 14th March 2020. You say purchases amounting to 26,000. The moment you've seen purchases having a corresponding ledger account of a specific name of a person, then it means goods were received but on credit. The moment you've seen sales account going alongside with a specific person's name, it means sales were made but on credit. Therefore, that person becomes our debtor. So Maggie in this case is what? A creditor. On 15th, there is a cash account and there is a bank account. So we can have here, let this one be our cash account. We had said that this one is a contra entry. Say here on 15th March 2020, bank account, meaning money came from bank to cash. So bank account giving us 10,000. The dollar sign must be maintained every time. The dollar sign. And then you go under bank account and record the same. Under the bank account, we are supposed to be crediting that transaction. So you will be saying here on 15th March, there is a cash account, money going to cash account amounting to 10,000, and that was a contra transfer, a contra entry. On 18th, cash and sales account. We already have the cash account and we have the sales account. It means that it was a sales made on cash basis. It was a transaction that was done on cash terms. On 18th March 2020, you can say here sales account giving us what? The amount is 25,000. Then the sales account here, we say on 18th 2020, sales in cash. So it is cash account 25,000. We are done with these two. We go to the next one, which is drawing and cash. So we don't have the drawings account, and therefore we need to come up with the drawings account. So on the drawings account, we are going to record on 19th March 2020, we have cash. Remember to put that sign up here. So cash account giving us what? 7,000. Drawings account. We already done with these two transactions. Now we can move to the transactions on 24th March. Now on 24th March, we have got Maggie's account and purchases account. We already have those two. Maggie's account is supposed to be debited and the purchases is supposed to be credited. We are supposed to have purchases account 600. On 24th March, we have Maggie's account giving us what? 600. Then we can go to sales account and match it against Saddam's account, which we already have. Saddam's account is to be credited, sales account will be debited. So we start with the one to debit. So we look for the sales account here and say the date is when? The date is on 26th March. So on 26th March 2020, say Saddam account. The amount there is 600. The description will be sales account. On 30th March 2020, we can have Saddam's account. We debit bank account with the description Saddam's account, trying to indicate that that is the corresponding account. And that is the same amount that you need to bring down here. So the other account has been debited. The option that is left is to credit. And we can see from the journal there on 30th March 2020, we have bank account with 12,000. Then we need to have Maggie's account against bank. Bank account is going to be credited while Maggie's account will be debited. So we can come here and debit Maggie's account. The date of that transaction is on 31st March. 31st March. And it is Maggie against bank account. So you can say here, bank, and the total amount here is 24,000, as you can see. Account of bank, and then indicate here on 31st, 2020, we have Maggie's account. The amount is 24,000. We are already done with all the entries. So up to the level that we have come is passing the journal entries in the ledger accounts. So what should come next here? We have to close down these accounts. We have to ensure that we summarize the accounts. Anybody who is coming to see the amount under bank should be able to know the balance in each ledger account. So that is what we call closing down the accounts. So we want to analyze the accounts to an extent that we can be able to have a single figure that communicates about that single ledger account. How we are going to close down the accounts? We are going to compare the debit side amounts and credit side amounts. The higher of becomes the total on both sides. Step 2 is to take the total minus the total of the lesser. I want to demonstrate that to be able to explain at least what I'm talking about. It can be shown clearly using demonstrations. Now, if you want to close down the bank account, we look at this. Here we have 90,000 and we have 12,000. If you add these two, you will have 1 or 2,000. Here we have 5,000, we have 20,000, we have 400, we have 10,000, 24,000. 24 plus 10 is 34,000. 34,400. Then 34,400 plus 20 is 54,400. Plus 5,000 is 59,400. Compared to 1 or 2,000, which side is higher? It is the side of 102,000. So we'll be having here, we'll leave a space up there, and then we put the total somewhere here and say so the total here, because this side is higher than the other end, you put the total of the higher side on both sides. So you'll be having here 102,000. 102,000 on both sides. We want to see which side should be adjusted so that it can catch up with this total amount. This side is already complete. This side requires some amount for it to come to that total. So here, the difference is going to be 42,600. 42,600 for it to come to 102,000. This is a balance carried down of that, and the balance is carried down on 31st March 2020 as at the end of the period. The same balance that is carried down as at the end of the period should be the balance that we shall use as our opening balance come the following period. That opening balance will be capturing it here. After these totals, you'll just say here, on 1st April 2020, we should be having balance brought down or balance brought forward of 42,600. So our balance carried down is the balance brought forward. the balance that we ended the period with should be the balance that we opened the following period with. The bank account has a balance of 42,600 as at the close of all those transactions. Now, in summary, we have 42,600 under the bank account. Transactions have happened, but at the end of the day, we now have 42,600. Under the journal record, we could not be able to get this 42,600. That one was just a record of all the transactions. But now you can be able to see we have already even developed what we call the summary of that ledger account. We are moving by closing down all the accounts because we have come to the end of the period. So we can come to this one and say all of them will be closed on 31st March 2020. Balance carried down. Balance carried down of 5,000. Why am I saying 5,000? This side had 5,000. This side there was no amount. And now the total would be 5,000. 5,000. This side would be 0. This side would be 5,000. The higher of is 5,000. That is our total. Then balance carried down. If it is on this credit side, the balance brought forward should be on the debit side. So you will have on 1st April 2020, balance brought down should be 5,000. I said balance brought down must be equal to balance carried down. Then this other account here, we have one side, credit side has 90,000, while debit side has 0. So the higher of is 90,000. So that is going to be our total. Our total. You can use a ruler to make it smart, but I'm just trying to do it this way just to give you a clue of what we need to do so that you can be able to proceed doing it in a decent manner. Now here we'll be having 31st March 2020 balance carried down. Balance, we first of all close it. So the balance carried down is the total amount. The amount minus what we have this side. Here we have 0. So it is 90 minus 0. Therefore we have the total amount here, 90,000. So that's what we have here, 90,000. Then our balance carried down is on the debit side. Therefore, the balance brought forward will be on the credit side. So balance brought down will be 90,000. The same should be done to the rest of the accounts. This is 46,000 minus 600. Here is 45,400. The total here should be 46,000, 46,000, and then this side on 1st April 2020, we can have balance brought down of $45,400. $45,400. Here we have 15,000 compared against 12,600. The higher of is, this side is higher than this side. Therefore, we need to put an adjustment here. On 31st March 2020, balance carried down. What is the adjustment? We take 15,000 minus 12,600. So that will be 2,400. The total was 15,000. 15,000. balance carried down on the left side, balance brought down on the balance carried down on the credit side, balance brought down now will be on the debit side. Balance brought down. Balance brought down of 2,400. We are done with that side. We can move to this other side. And then here you can obviously see that we have 15,025, of which that will be 40,000 compared to 600. It means this side should be adjusted with the balance carried down. So here we'll be having on 31st March 2020, balance carried down of 40,000 minus 600 should be 39,400. So here will be 39,400. Then what will be the total? So here will be 40,000. 40,000. On this side, now the opposite side becomes the side for having the balance brought down. The amount is 39,400. Then we have this side, we only have 400, the other end, so the higher of is 400. This side should be adjusted by a balance carried down. On 31st March 2020, balance carried down of $400. So here we have 400, we have 400. Then we have this side, we have closed it on the credit side. Now we bring it down on the debit side. Balance brought down. Then we move to another one which is on the account of MAG is 624,000, that is 24,600. This side we have 26,000. The higher of is the credit side. So it is this side that we need to adjust. So on 31st March 2020, balance carried down should be 24,600. The other side was 26,000. So the difference will be 1,400. The difference is 1,400. So 1,400. So here you'll be having a total of 26,000. A total of 26,000. Now we have here on 1st April 2020, balance brought down of $1,400. Then the other account which we also need to close down is cash. We have 10,025, that is 35,000. And we have here 7,000. So 35,000 is higher than the other one. So we need to adjust this side. This is 31st March 2020, having balance carried down. So here is 28,000. So here is 35,000. 35,000. So this side will be having a closing balance brought down of 28,000. Then the last one is the drawings account. We have 7,000 on the debit side. This side doesn't have, so the R of is the debit side, which is 7,000. So to adjust credit side to match this, you have to put the entire amount. So it is 31st March 2020 balance carried down. Balance carried down of 7,000. Now the total is 7,000. So here we have 7,000 and 7,000. So we have here on 1st April 2020 balance brought down of 7,000. Up to this point, we are done with the ledger entries and we have closed down all the ledger accounts. These balances are supposed to be picked and we are supposed to present them or display them on the trial balance. Now here we should be having something called the trial balance. After closing down the ledger accounts, now we are moving to the trial balance. Now, the trial balance is not very difficult. It's just a matter of picking the end result or the amounts that we used in closing down the accounts, and then we display them here in terms of debit balances and credit balances. So here we'll be having details. This is the details column. Then we have here the debit side, which you can also write as DR and CR. We'll put down all the debit balances. So we can start by this one. The bank account has got a debit balance. So we can mention here, can just write here bank account, giving us what? The bank account has 42,600. So just say here 42,600. So the amount, it is in dollar. So you can put it up there or you can keep on writing it. So we have $42,600 for the bank. So we are done with the first account. Then we check capital account is having the credit balance. So we go to furniture. So here just write furniture. Furniture, which is 5,000. So 5,000. Then this one is also done. We look for any other account with a debit balance. There is this one of purchases. So you can come here and say purchases having $45,400. $45,400. This Saddam's account is also having a debit balance, which means Saddam is a debtor, a current asset. So we have Saddam being a debtor with the amount of 2,400. So we have marked the only amount that we have left here is the capital, which we'll come and pick later. Then we come and sales is also having a credit balance. Go to advertisement. We can just go and pick advertisement expense. Advertisement expense, giving you $400. So we have here $400 under advertisement. We are done with advertisement. Now we need to go to cash account. cash at hand. Cash at hand will be, the amount is $28,000. $28,000. The other one is drawings. So you can also have drawings here. This one will affect capital, amounting to $7,000. Now we can go and pick the ones of credit side. And we can start with capital. So we have capital $90,000. Capital $90,000. Capital $90,000. We are done with this page. Then we go to this other page. On this other page we have sales. So you can record sales. The total amount under sales we have $39,400. So we have $39,400. The next one is Maggie's account. Maggie being on the credit side, that one is a creditor. Maggie becomes the creditor. This is a present obligation of the organization. A present obligation of the organization which is expected to take not more than 12 months before it is settled. So we have the account of Maggie having 1,400, which is... The next thing that we need to do is to compare the two sides and see if the trial balance is balancing. So this is the point. At this point is where people normally say that your trial balance is not balancing and therefore the balance sheet will also not balance. So we can check at this point. You're supposed to sum up all these items here and compare the total against the total of these items. Let us sum them up. So we can have a list here to test if they were done correctly, if the double entry concept was obeyed. So if that is true, you'll end up with a trial balance which is matching on both sides. A point to note at this level, we know that assets are supposed to be having a debit closing balance. But there is a chance that a bank balance may be closed with a credit balance. What would be the interpretation of that? It would mean that there was a bank overdraft. What is a bank overdraft? It is the extent to which the bank has been used beyond the available balance. If the available balance in the bank is 30,000 and we have used 50,000, it means there is a 20,000 which is in excess of whatever was available in the bank. So that 20,000 becomes a bank overdraft. So that bank overdraft will be shown on the credit hand side. So don't be surprised when you close down your accounts and you realize that your bank account is closing with a credit balance. That would mean that it has been overutilized. So the following transactions, because we are basing our argument on what we call a going concern concept, as we proceed with the operations of this organization, we'll just come to realize that the bank is being replenished by some operations that will earn the organization more income or more funds coming into the bank will make it go back to the positive bit or the debit side or the debit balance. So don't be surprised when you see that it is a normal occurrence in the financial transactions. Otherwise, thank you for taking your time. Thank you for watching this video. Please consider subscribing. Where you have a comment, please consider doing that comment at the comment section down there. Please also remember that you need to click the notification bell so that you can be able to get this information. Every time I upload a video of this kind, then you will be able to get that information. We meet in the next video where we'll be discussing about statement of financial performance. the profit and loss account, income statement. The three mean the same thing. Thank you guys. Have a nice time. Until next time. Thank you.